Hi everyone, welcome back to the Edge Capital podcast. Today, we're going to be diving into the latest developments in the crypto markets, some of our research views on the cash and carry or funding rate arbitrage trade, and also looking at institutional demand for Bitcoin yield and how the Edge Capital Strategies offers a Bitcoin share class as a solution for this. Before we jump in, this conversation is only for informational purposes only. It is not investment advice or solicitation to buy or sell any securities. Please refer to the full disclaimer at the end of the video. Vadim, I'll hand it over to you. Let's start with the market overview. What are you seeing as the key developments in crypto markets right now? And how has Edge Capital capitalized this in June performance, from my understanding, one of the strongest months this year so far?
Thank you, Boback. That's a very good question. I think the way we think about it, and that is supported by our research, is that we see twofold, two dimensions. The first one is we see additional inflow from institutional players going to crypto. And this is primarily driven by normalization in trade tariffs and trade wars. If you see US equities already reached the highs and they're going through the highs for this year. So I think concerns about the recession are pretty much over. And this sounds like to be the consensus in the whole investment banking sector, right? As a result of this, some of the largest wealth managers in the world ended up missing out because they sold some of their position during the large sell-off. And where they're right now, they're trying to deploy capital, right? And they're trying to take a little bit more risk. For that reason, we see inflows in the digital asset space. Bitcoin is reaching all-time highs, right? It's more than $100,000. We see other tokens and other big names also have been outperforming, primarily in June, right? That was in line with global risk sentiment. From our perspective, our strategy primarily benefits from two things. Number one is venture capital that's coming to the business because all the new companies in crypto eventually come to us and ask for seed liquidity or liquidity provisions or TVL. So this has been structurally very positive. We see a lot of venture money came to the business, and we saw a lot of companies coming to us asking for capital. Number two, because of the token appreciation prices, that has been definitely a tailwind for our performance. So June was probably one of the best months for this year from our strategy, and this is structural, in my opinion, because recession is not happening. Rates are getting low structurally in the US. We have 2 cuts priced in, and we have new companies actually coming to the crypto market, and there was a lot of new projects that are building.
Brilliant. Thanks so much for the insight. And many participants in crypto run the cash and carry trade or funding arbitrage trade, but funding rates across various tokens have been largely flat or even negative this year. Is this temporary, or do you see a structural shift towards a lower funding rate environment going forward? And how does this affect Edge's strategy?
That's an excellent question, and we have this question asked by a lot of people in the industry, right? So what is a basis trade? It's simply when you buy Bitcoin spot or any other token, sell futures on it. It becomes a simple cash and carry. Multiple projects have been doing it, automating it. You can do it on various exchanges. You can do it also on the regulated futures exchanges as well. So this is a very big trade. We estimate it's about $40 billion currently sitting in this trade, right? What we've seen this year, because of the sell-off, the basis, so the implied funding rate, compressed a lot, right? If you look at the charts of the Bitcoin funding rate, we see that this year is being from 0 to 10% roughly. In our opinion, it's a structural shift for 2 reasons. We think structurally rates cannot be very high because of clean and arbitrage opportunity to make money. So what we've seen this year is that more capital came into the crypto business, primarily from the US. So clearly, US capital is affecting, and there are a lot of inflows that are taking place. Number two, you have more access and more liquidity. And number three, some of the prime brokers are offering cross-exchange prime brokerage services, which allows you to arbitrage this rate much faster. So if you look historically, again on the chart of the funding rates were very high in Q1 last year and after the US elections. Since then, these rates have been relatively low. So in our opinion, based on our research, we think they will stay low because we don't think this rate should be above 20%. It's effectively a risk-free rate. It should converge to about 7-8% because effectively after collateral drag, it becomes about 5%, which is similar to risk-free rates on dollars in the US. From our perspective, we have relatively limited effect coming from this to our strategy. We use derivatives. We clearly use all hedges as well for our strategy because we're not taking any directional risk. That's why clearly having positive funding rates is positive for us. But this is very, very little amount in terms of P&L contribution for the fund strategy. That's why structurally we think we will outperform other funds who've been solely relying on funding rates historically.
Brilliant. Thanks for that, Vadim. So moving over to Bitcoin yield, and a huge focus for long-term players holding Bitcoin, and a lot of institutions are now looking to generate yield on their Bitcoin. Edge Capital is one of the first regulated hedge funds to offer Bitcoin-denominated share class. The Edge strategy targets 15-25% in Bitcoin. How is it possible to generate these yields in Bitcoin?
That's a very interesting question. So if you look what happened historically is that, first of all, the risk-free rate on Bitcoin has been zero. There is no such product that would generate you yield on Bitcoin without risk. There is no risk-free rate. There is no staking yield, right? If you look at US treasuries on US dollar, you can say that US treasuries is a risk-free rate, simplified like 3.5-4%, right? If you take Ethereum or Solana, you have a normal natural staking yield, which we assume is roughly risk-free. If you stake Ethereum on a node, you generate about 3% a year. Solana yield vary, call it about 7% a year, right? On Bitcoin, there is no such thing because Bitcoin chain does not have proof of stake technology. So there were a couple of upgrades. So Babylon and Lombard were effectively doing these things when you can actually stake Bitcoin and use Bitcoin for economic security for other chains. But the yields on this restaking has been so far relatively low. Our estimates show that it's roughly 0.2, 0.3%. It might increase over time, but we don't think it's going to be anything above 0.5% a year. So in short, despite the progress in the development of Babylon restaking of Bitcoin, the yield has been relatively small, right? It's still positive, but it's not material, right, as an Ethereum chain. That implicitly created a demand to generate yield on Bitcoin. So there are not many solutions in terms of how you can do this. Some hedge funds take directional risk. They trade Bitcoin up and down, effectively taking full exposure on this, right? But this is algo trading, and you're taking risk and so on. From our perspective, what we do, we typically use Bitcoin as collateral for margining, right, and generate yield in a normal strategy, simply using Bitcoin as collateral. So that's why, from our perspective, we've been doing it for a while. We have Bitcoin share class for almost 2 years now, and it has been relatively successful. We have a lot of interest in this, and this share class follows exactly the same strategy as the core fund. It does generate yield in dollars and converts this P&L at the end of the month back to Bitcoin to our Bitcoin holders, such that we are able to generate Bitcoin on Bitcoin returns. So it's been relatively good. So, and well, hopefully, we'll have more products allowing Bitcoin yield to be passed on to investors going forward.
Brilliant. Thanks, Vadim. I think that's it for today. Really appreciate you guys tuning in and looking forward to seeing you soon.
Thank you so much, everyone.